What's going on, YouTube traders, investors? Today is the week 20 video for the $100 a week investing challenge on the Robinhood app. And it's also the what's in my portfolio for the month of November. We made a bunch of changes. We're all dividend stock portfolio now. So without further ado, let's get into it. All right, before we get into the video, there's gonna be a link in the description below for Robinhood. If you use that link to sign up, you get a free stock, I get a free stock, it's all good. And you stand a chance of getting a Berkshire Hathaway, Apple, Facebook, GE, Ford, and many more. And remember that everything on the Robinhood app is free. You don't pay any fees to trade. That means buy or sell any stock. Also, options are free too. So please use that link. It'll be greatly appreciated. Thank you in advance. Okay, here we are on the homepage of the Robinhood web platform. And as you can see today, my portfolio is sitting at about $2,368. I'm down $89 today, or over 3.5%. And that's due to a loss on an option. On Dropbox, I got into a call. It was more of an earnings play. It did not work out the way I wanted it to. Hopefully next week, we'll be able to recover some of that money. But I was also in an option in Vonage where a buyer came in and bought 5,000 contracts. It wasn't a spread at the ask, and they tanked on earnings, so I lost on that too. And you'll see for the week, I'm down $266 or 10%. For the month, I'm up $161 or over 7%. And for the past 3 months, I'm still up $103 or 4.5%, almost 5. So, but that's the game you play with options. You can make a lot of money and you can lose a lot of money. So we made some big changes in the portfolio as far as stocks go. I got out of Run, Kronos Group, AMD, and Luckin Coffee. And my portfolio consists of only stocks that pay dividends. I'm going to use the options as the exciting part of my portfolio from now on. But I'm going to be in my positions, the ones I invest in for the long term are only going to be dividend stocks. The first addition to the portfolio is going to be Ford, ticker symbol F. And if you know anything about Ford, they make automobiles and they pay a very good dividend. But we'll get into the particulars. I bought 35 shares at an average cost of $9.10. We're currently down total return a little under 1%, $1.93. Today was a good day for Ford, up $5.25 for today's return. But we'll go ahead and scroll down to the important thing for Ford, and that is that 7.84 dividend yield. So if you're looking for a reliable dividend, look no further than Ford. The next addition to the portfolio is going to be Energy Transfer, ticker symbol ET. I did a video on Energy Transfer. I'll put a card somewhere at the top of the video, but go check that out. It tells a lot about that company and how it's not dividends that you'll receive, but a distribution. I mean, there's a difference. Go check the video out. But on to the particulars. We bought 8 shares at an average cost of $12.35. We're currently down a little over 2% or $2.22. Not a big deal at this point. The big thing about Energy Transfer is this dividend yield right here. I believe this is off a little bit. I think it's probably more closer towards 8%, but that's something Robinhood needs to work on, is these dividend yields, because I think that's a little high, but either way, 8% is really good. The next addition to the portfolio is going to be AT&T, ticker symbol T. I've been in AT&T before. The last time I was in them, they were probably around $31 a share, 30 or 31. The main thing with AT&T, they pay a great dividend and they're a mega cap company. So you don't see too many mega caps. I want to say they might be the only mega cap company that's over $200 billion market cap that provides a dividend of over 5%. And we'll scroll down and look at the particulars. I got in at an average cost of $39.15. I have 8 shares. I'm currently up a little bit above 0.5%, which this is still really early. This stock, I believe, has a chance to really make some moves. It's already made tremendous moves from around $30 to almost $40. So we'll go ahead and look at the dividend, which this isn't correct. I want to say it's more like 5%, but for a mega cap company that pays you 5%, you can't beat that. Get into AT&T before it gets really expensive. Here's another addition to the all dividend portfolio. It's going to be Coca-Cola, ticker symbol KO. This is another one I've been in. I want to say I was in probably when the stock was around 45-ish dollars a share. As you can see, they're sitting at $52.20 right now. The thing about Coke, everybody knows what Coke is. I mean, I used to drink a lot of Coke. Now I just drink a little bit of Coke, but they have so many different products and they're going away from the sugary drinks, but they're such a big company. They can go ahead and they can come up with healthy drinks that everybody's going to drink as well. So Coke is here to stay. And if you know anything about Coke, Warren Buffett has a humongous stake in Coke. His dividend payments are in the millions of dollars. So you can't go wrong with Coke. We'll scroll down and look at the particulars. I got 6 shares at an average cost of $52.36 for a total return of a little under 0.5% right now, down 93 cents, which I'm in this one for the long. You get in these dividend stocks for just to invest money and have them pay you money for investing in them. You know, this is one that you'll look at the dips and add more, you know, because of that dividend, which let's check the dividend out. It's sitting at over 3%. I think that's about correct. I think Robinhood has that one about correct, but who knows? But anyway, you can't go wrong with Coke. They're going to be a major player in the drink industry for a long time. I don't see Coke going anywhere. The last addition to the portfolio is going to be AbbVie, ticker symbol ABBV. And the main reason I got into this particular stock, besides the dividend, is going to be for diversification in the portfolio. I wanted to have something in the healthcare sector or biotech sector. And AbbVie was the one that during my searches was the first one to come up with an over 4% dividend yield for a biotech. So let's scroll down and look at the particulars. We have 4 shares at $82.10. We're up almost 4%, which is pretty good for just getting into this stock. It's up $12.46, but it did have a very good day today. Today it was up almost 4%. So, but let's scroll down and look at this dividend. Robinhood has it at 4.28 dividend yield. I think they're close. I don't know if that's exact, but if you want to get an exact dividend yield, try finviz.com, or I'm sure there's other places that update the dividend yield way more frequently than Robinhood does. But that's going to conclude the additions to the portfolio. We're going to look at the 3 stocks that we still have in there that were from the previous video. And here we are back. This is a stock that's been in the portfolio for a while now. It's New Residential Investment, ticker symbol NRZ. And we have 20 shares. We haven't added to this. Our total return is over 7% or $22. We did receive a dividend payment, I believe October 31st, for $10 because NRZ pays over 14% dividend yield. So that's it for NRZ. Let's jump over to the other two positions that we had in the portfolio and have been here for a while. Here we are on Vici Properties, ticker symbol VICI. This one has been in the portfolio a while and it's going to stay here. We have 13 shares at an average cost of $22.01. We're up over 10% or almost $30 since Vici has been in the portfolio. So, and if you don't know anything about Vici, I've said it before, Vici is a REIT, a real estate investment trust. They are an experimental REIT because they own gambling type properties, resort type properties. So on to the last existing stock in the portfolio. And the last stock in the portfolio that's been here a while is Altria, ticker symbol MO. Now, Altria has been dragged through the mud the past few months with everything dealing with Juul and just being not a very healthy stock because they do sell cigarettes. But they've continued to head up. I'm kind of shocked myself. The main reason I got into Altria was for the dividend yield, but we'll go ahead and look at the particulars. I have 7 shares at an average cost of $43.65. We're currently up over 6%, almost $20. But the main reason I got into Altria was for the dividend yield right here. Over 6%. I don't know if that's correct. I think it's higher than 6%. I want to say like 8%. But this stock has really performed way better than I thought it would with all the drama surrounding Juul. And like I said before, they own a 35% stake in Juul, which is worth billions of dollars. Matter of fact, they recently came out and wrote down 4.5 billion in their Juul investment. So, and for this stock to keep heading up, I mean, we can look at the week. We can look at the month. We can look at 3 months. Here's where all the drama occurred. And since then, it's went up, came down a little bit, but it looks like it's headed back up. So Altria is one that pays a very good dividend, and I'm going to stay in it. It's going to stay in the portfolio. And that's going to conclude the update this week. If you like the content, subscribe, like the video, and smash that bell for future notifications. See you in the future.